I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi there, I'm JB. In this video, I'll take a look at Nvidia and run them through my valuation sheet and maybe determine if Nvidia is going to be a part of any of my portfolios. I have several portfolios at this point, and most of them are growth-oriented. But I'm planning to expand my dividend portfolios, and when I get to that, the dividend portfolios will also be featured on this channel. So, is Nvidia a buy in 2023? Well, let's start with the basics. A lot of people are looking at AI companies and trying to determine which one is going to win. And in my opinion, that's a huge reason why Nvidia has done so well. But let's face it, there's not going to be one clear winner. Everyone and their grandmother is talking AI and trying to make a new company using AI. And to power this, they usually go for the Nvidia H100 GPUs. Just look at Tesla. Even though Tesla is working on their own Dojo CPU cluster, they still need the power right now, as Elon said on the earnings call. Tesla is going to buy a lot more from Nvidia, but let's hear Elon himself say it.
We're using a lot of Nvidia hardware, and we'll actually take the Nvidia hardware as fast as Nvidia will deliver it to us. Tremendous respect for Jensen and Nvidia. They've done an incredible job. They've been kind enough to prioritize some of our GPU orders. We expect to use both Nvidia and Dojo, to be clear.
Did you catch that this massive purchase is not over yet? We know Tesla is currently working on integrating those 10,000 H100s, and they will be buying a lot more. So even with their already enormous Nvidia clusters and their own Dojo, they are still compute restrained. So this trend will probably continue a while. But the real question is, for how long? When will the market realize that this will not be a many winners take all, but the big players will eventually win the majority of the game? And yes, in the short run, Nvidia would be a good play, but as an investor, we need to look a lot further. If we're not just traders or gamblers, which is okay if that's a strategy and we accept the ton of risk associated with that, that would be fine. I'm an investor. I think long term. So we need to think a bit further into the future and consider where this AI boom is going. As I mentioned in my Which AI Will Win video, there are two types of winners. The ones who own or have access to the data, or the ones that make or owns their infrastructure. The picks and shovels play. Nvidia is a number two, and I honestly think that their position is going to get disrupted within 3 to 5 years. If you heard the Lex Friedman interview with Mark Zuckerberg, he has some good points. There's not going to be one AI to rule them all. There's going to be a lot of specialized smaller AIs who do the job you need and are really good at that specific job. And as the compute moves to smaller assistants on smaller devices, the need for Nvidia products is going to drop. Let's hear a clip from that podcast.
There's this notion of like, you're going to have an assistant or an agent who you can talk to. And I think probably the biggest thing that's different about my view of how this plays out from what I see with OpenAI and Google and others is, everyone else is building like the one singular AI, right? It's like, okay, you talk to ChatGPT or you talk to Bard or you talk to Bing. And my view is that there are going to be a lot of different AIs that people are going to want to engage with, just like you want to use, a number of different apps for different things, and you have relationships with different people in your life who fill different emotional roles for you. So I think that they're going to be people have a reason that I think you don't just want like a singular AI, but you want to know that AI is only going to sell your products. You don't want it, recommending your competitors' stuff, right?
Yeah.
So it's not like there can be like just one singular AI that can answer all the questions for a person, because that AI might not actually be aligned with you as a business to really just do the best job providing support for your product.
Again, this was just to point out that we are in the beginning of the AI revolution, And just as back when IBM ruled the server market, Nvidia will also get disrupted, maybe even by Tesla. Also, we need to remember that even Microsoft, Google, and others are working on their own silicon and could very well be better suited for their specific AI purpose. That might be Nvidia's biggest problem. Their GPUs are not optimized for any type of AI compute and could very well be beaten by a lot smaller players who have specialized their silicon to the exact process needed for the AI compute they need. That's one of the main reasons Tesla is doing their own Dojo system. But enough talk, let's look at the numbers. The numbers always tell a story, we just need to be able to understand them and have them in the context. And that's why I made this valuation sheet, so I can quickly evaluate if a company is investable for me or not. Or let's just say at the moment. So let's get into it, and this time I will only focus on the complete scores and maybe just drill down a few metrics, but I don't want this to be a 25-minute video. Oh, by the way, if a company makes it through my valuation sheet with a score above 75 and preferably above 80, I will shortlist them and wait for them to hit my price target, or close to it. Revenue and earnings. When I look at the last 5 years of revenue, income, and growth, I see a company that grew very, very quickly from 2017 to 2019, and then got hit in 2020, like every other chip maker did. But then they resumed their growth in 2021 and got a massive boost from the AI boom. This resulted in an average growth of almost 34%, and the last 2 years over 57%. But again, we gotta ask ourselves, is this going to continue? And we need to be a bit skeptic and or realistic here, especially when we use these numbers for our valuation part. Nvidia guides for a great 2023, and yes, that will probably be right. I would like to see some guidance for the 3-5 years, but let's just see. When we look back, chip makers have historically always had a choppy revenue and income, and we see the same here. But still, a 100% score in my revenue and earnings part is a very good start. Financial strength. In this part, I look at how the company is using its cash and debt and how, or even if, they are able to withstand some hard times. That part is actually the most interesting. The first thing that hits me isn't the cash pile, but I was a little surprised by the large debt. I realize chip makers have a lot of equipment and needing to write that off over time, but when they have a lot of cash and interest rates are high, I would prefer seeing a lower debt rate. Nvidia is actually worse than 63% of their competitors. And in debt to equity, I would like to see a 0.25 ratio. Of course, that also comes up in the debt to EBITDA number, because they are connected. But still, almost every other metric is fine, and coming out of the financial strength part with almost 67% score is very, very good. Not perfect, but very, very good. I do notice though that the Piotrowski F score is neutral. That could worry me a little bit because Nvidia's current ratio is lower this year, which is current assets divided by current liabilities, and asset turnover is also lower. That's total sales for the year divided by total assets at the beginning of the year. But for now, I will allow it as it's usually around those levels in high growth companies. Profitability and growth. With gross margin over 64%, it's okay to only be growing about 2%. I would even be okay with no growth here. I shouldn't subtract the point here as the content matters. So in my mind, I will give Nvidia a 100% score in this part. I just need to remember that it will still only give Nvidia a total score of around 64% overall. Return on equity, return on assets, return on investment, return on invested capital, ROC, ROCE, everything looks great. And we should be very satisfied with these numbers. As I mentioned, Nvidia would actually get a 100% score here. Fantastic. Dividends. Oh, this one is actually a funny one. Would you expect dividends from a high growth company? I wouldn't. But Nvidia has paid out dividends for some time, even if it was not very much and not consistently, but they still did it. So that begs the question, why? Why would they do that? It seems as it's a token and a signal to investors that we can do everything, dividends, buybacks, high growth, etc. I don't like it. It signals something else to me. I see a lack of focus and trying to please everyone at once, instead of looking ahead and planning for the future. But more on that in the conclusion part. Now, let's get into the valuation part, the part I really like the most. Remember, these individual metrics might seem weird and at different end of the spectrum, but that's my way of balancing out and finding a price I feel is more correct. I could have just used a single discounted cash flow alone and hit a fair value number, but I like doing it this way. So, on to the value metrics. Price to sales ratio is around 32 at the making of this video. That makes Nvidia higher than every competitor, and I would say that's very high price to sales ratio. Price to book compares the share price to the company's book value per share. 37.35, meaning share price is 3.74 times higher than the book value per share, and a lot more than any competitor. Enterprise value to EBITDA attempts to value a company, and it's supposed to be a little better than using the PE ratio. Almost 78 is way higher than any other. Usually you would like to see an EV to EBITDA around 10 or around there. To comparison, the industry median is 14.26. The PEG ratio. This is price to earnings ratio divided with the growth rate and is considered an easy way to compare companies with different growth rates. Nvidia has a 5.15 PEG ratio. Industry median is around 1.25, and the good competitors are around 169 and 124. So high. EPS versus its 5-year average, that is earnings per share divided by the 5-year average. I use that to see where are we going, is it going the right way, and I need it for the EPS valuation. Nvidia is at 50%, which is very, very nice. Book value per share is a very conservative value of what a share of the company should be worth. That's shareholder equity divided by shares outstanding. Nvidia is at 11.14, which of course can't be used on its own, but it's a good anchor to drag down an often optimistic EPS valuation. EPS valuation. This is a standard discounted cash flow valuation where I use earnings per share to determine the intrinsic value of the company. As I mentioned, it's extremely hard to predict growth, and especially over a 10-year period. There will be ups and downs. Here I use 30% growth for the first 5 years, 25% for the next 5 years. My minimum rate of return is 12%, as I can get that elsewhere. So I discount it back with that, and I expect the price multiple, the PE, to be around 45, even if I would like it to be lower. Why 45? Well, Nvidia's PE has been over 50 for a long time, so a little bit lower than that. That gives us a share price today of around $708, which is quite high. But as we know, EPS valuations will sometimes be very high. Remember, we still haven't factored in buybacks, which would be positive, and further dilution, which would be negative. Discounted cash flow valuation. I also make the same valuation using the free cash flow per share. This is usually somewhat lower than the EPS valuation, but I still use the same growth rates and discount rate, etc. That gives us a share price of around $62. And again, this is very, very low, but trust me, when I'm done with all the numbers, it'll make sense. If we use a standard EPS valuation, looking for the intrinsic value, we get a share price around $220. So let's see if my method gives us something around that in the end. The Graham number. Even though this would give us a very low valuation, I again use a slightly modified version, and I know it will give me a higher price, but it's still at the very low end. Usually the Graham number does not work when companies' PE is higher than 15, that's why I modify it. This version gives us a share price of around $66 per share. I know, again, it's a low number, but Graham numbers are always low. Peter Lynch fair value. This applies to growing companies. The ideal range of growth rate is between 10 to 20% a year. I also modify the PEG ratio a bit. So, with my modified Peter Lynch fair value, we get a price of around $243 per share. So, adding all those valuations up and finding the average, we get an average share price of around $218. And as you can see, Nvidia is nowhere near that price. But I would argue that's actually a fair price. I have used both low and high valuations, so I really don't need to add margin of safety. We can see that that price was hit in the beginning of 2023 before the AI frenzy, so I think this is a realistic price. I would not buy a lot of Nvidia at the current price, and I might not wait until it goes down to 218, but I would definitely not buy over 275. I'm willing to pay a little extra for a company with these growth rates and the earnings, but I don't want to overpay. Conclusion. As you probably already guessed, I won't be investing in Nvidia in 2023 unless it drops a lot. I will mention that if we give Nvidia a 100% score in both the profitability and the dividend part too, the overall score would be 79. So this is a company we should consider. We just need to get some shares at the right price, and maybe Nvidia will be like Amazon, which always seems to be overvalued. Did I mention I never bought Amazon because of this? Yeah, what a mistake. So, the margins are great, the growth is great, and the margins are consistently high. I just don't like that stock-based comp is growing so much and fast. That means we as shareholders are getting diluted when they are exercised. And that brings me to the massive $25 billion buyback Nvidia announced. What is that? I think it's because they want to please investors and signal strength and keep focus away from their rising stock-based comp. I would actually prefer it focusing on mobile devices. If you really follow the AI market, you know that a lot of the latest models have been optimized to be able to run on even PCs and even mobile devices. Why? Imagine you had Siri on your phone being able to access the total knowledge in the world. That will be the goal for the most AI companies, even though it's only supposed to perform a single task. Except maybe for Elon Musk's Neuralink. They want to drop the slow human interface, i.e. fingers and spoken word, and tap directly into the brain. But hey, that's another video. I would argue a lot of Nvidia's stock price is based on hopes and dreams, but let's see. I don't see the future earnings being enough to sustain a price like that at this moment. Could it be possible? Maybe, but I'll rather put my money elsewhere at this point, or maybe even stay liquid, which I currently am. I'm still convinced we will see a form of recession in the end of 2023 or maybe start 2024. And I want to be ready with cash when that happens. So right now I'm keeping my powder dry and have at least 5 or 6% in cash and keep accumulating. I have even put my new Tesla Model Y on hold for now. Also because I want the new Juniper model in late 2024. I'm just waiting to see a correction or at least some lower prices in a few months. My guess is this will happen in 2023 or maybe Q1 2024. As I keep saying, patience, my friends. Patience is the best virtue for investors.
The boy has no patience.
You will learn patience.
So let's just wait a little and see what happens. I hope you got some value from this video, and if you did, please hit the like button and maybe even subscribe. If you have a company you would like me to look into next, write the ticker in the comments and I'll consider looking into it. That's all, folks. Hope to see you in the next video. Remember, the best investment you can make is in you. The more you learn, the more you earn. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning. There ain't no point in resisting. Living